it doesn't. The linkages and the causality haven't happened, and it's being kind of replaced. God forbid, but we live in a world just now where the dominant ideology is, what is it called? Modern monetary theory. Is it MMT?
Yeah.
Or is that what it's called?
Yeah.
Because it's so. I'm a little bit out of it in terms of the MMT or what have you. I keep calling it PMT, but I'm thinking of something else. What I want to say, because you're saying the solvency event, right? It's not right. It's not proper that you can just spend your way out of the crisis like we did out of Lehman from 2008.
No, I don't.
It's not right.
No, I don't argue that at all, because I actually do think MMT is much like the New Deal was. I think it's doable. What happens to the currency markets or the price of gold in that? Okay, that's great. That's a great macro equation for us to all play. Can a massive fiscal stimulus that actually rebuilds and does create some productive use of assets, new assets, let's say, yeah, I think that could work. What I'm saying is paying somebody 20% less than their income to give them a subsistence living destroys cash flow for companies that are already in debt. So my fear is that playing out with a very little time. I mean, basically, everyone blew through all of their savings in 1 month, including every small business. So,
but take me to the edge, push me over the edge, because you said solvency. Describe the solvency issue that says, I'm coming in and I'm cleaning this shit house, okay?
Yeah. So
how does it end? Because I don't see, I'm not smart enough yet. So I'm listening.
So the solvency event for me is, I use the restaurant because it's the easiest one for us all to understand because we go into them all the time. So if you go to China right now or Singapore, there's social distancing in restaurants. So they've reopened. Hurrah, equity market rallies. And there's been some subsidies for people to keep them afloat. Most of that is in the form of new debt. There are some cash handouts too. But you open your restaurant, and here the magic happens, is you can only have half or less the number of customers. The moment you open your doors, you have to pay staff. The moment you open your doors, you start puking money. When you furlough your staff and negotiate with your landlord to not pay rent, you can hold in the deep freeze for a period of time. You reopen, you're fucked in a couple of months. And that has a knock-on effect, right? So everybody gets tipped out of jobs because you're going to downsize the number of restaurants. That's okay. That's how the cycle works. But the problem is that happens at scale because of the unemployment, and you've got unemployment benefit of which people are starting to save. I think you're likely to see the saving rate rise because of the issues that the behavioral and emotional issues people have faced from this. They're not going to go back and open the bull.
I don't think they will not have the means to save. They won't be earning enough to save.
Okay, fine, fair enough. But the chances of consumption going back to the same level is unlikely for an extended period.
Okay, but then can I say to you, okay, so that I fully get that. I can see that happening. And so, I'm like the new Chancellor of the Exchequer. This guy's incredible in the UK. He's like, what's the problem? No problem. Let's just spend, how much do you need? No problem. This guy's the most popular politician ever. And he looks really nice. He always smiles. What's the problem? No problem. Okay, so I'm going to role play that. And you've just, my smile, I'm like, oh my God. But I'm back being, what's he called? The UK Chancellor? It's an Indian name. I don't know.
Oh, yeah.
Sunny, sunny disposition. He says, okay, hey, the problem here is so you open and you hemorrhage. So don't open, just furlough. And so then you say, yeah, but okay, so these are low skilled, let's say we're talking about the restaurant and the kind of lower skilled elements of that. And they sit there on unemployment or universal credit. And so I'll problem solve and I'll say, the problem with that scenario, universal credit's too low. I'm gonna double it. Okay, what's your problem now? Okay, so you said, well, how are you going to fund that? No problem. Are you serious? I'm sovereign. I'm UK. My government debt to GDP is 100. I look at Japan. those crazy guys are at like, what are they? They're at like 220.